In 2019, in anticipation of the 2020 market crash, I pulled out of the market. I did this right after our wonderful President Donald Trump started tweeting a bunch of nonsense and tanking the market unpredictably. I really was doing really well at that time. But once I saw the power that Donald Trump had over the market and how erratic he was, I mean, he gets up at 3 a.m. in the morning and starts tweeting something and then tanks the market. I can't predict that. So, as far as short term investing, unless you are hardcore, you're a day trader, you're watching things, and you got all kinds of mechanisms in place, or you're corporate and you got a bunch of systems in place to protect yourself, it's just not worth the risk or hassle. So, knowing that we're looking at a market crash, I pulled out. I think it was once this Corona thing started happening and the market started crashing. I knew that this is the crash I was waiting for, and it's time to jump back in. So I opened up an account pretty rapidly, placed my first trade. I think it was February 28th. So right about here, you're looking at the graph of the performance. I started taking immediate gains. And now, keep in mind, this is in the middle of a market crash. A lot of people are negative, taking huge losses, and I'm actually growing and getting gains right away. And I see the gains went right up to here, and then I took some dips here, and then it rose up, and then it just kept going up and up and up and shooting up. And of course, we took a little bit of a dip today. But one thing I want you guys to take a note of. This is a video that I did on March 19th. This was my prediction of where the market was going to go. Now, if you take a look at where we were, so this is March 19th. Click on the like button. Come on. Click on the like button. Subscribe if you haven't subscribed already. Do it because you know you want to. Thank you. Gracias. Gracias. My expectation was that the market was going to continue going down, and then there was going to be a momentary surge where it looks like things are bouncing back or whatever it is. People start, momentum trading, like, oh, great, it's over. And then reality would set in and things would start falling again. So if we look at this pattern of this falling, and then continue to fall, and then this sort of surge. Now let's take a look at what actually happened. Now, of course, I don't have a crystal ball. I can't see the future, so it's not going to be exact. But I think the fundamentals are there. Falling. So 19th when I posted that video. Continued to fall. 19th, 20th. And then on the 23rd, it started to bounce back. And it's like, oh, great, it's in recovery. Momentum trading kicked in. People start, jumping in. Like, okay, we've hit the bottom. Remember, at this time, I told you guys, in my opinion, I can't know for sure, I think we're close to the bottom, but not quite there yet. I think we had a little bit of a ways to go. So, right around this point, it's kind of a game of chicken. I was like, oh man, should I jump back in? Things are looking really low. It was getting, I think we got within $40 of my bottom price, which is the price I'm predicting, to be the bottom. So since I know I can't be completely exact, maybe that was a bottom. Maybe I was too pessimistic. So that's where not being emotional is key. I stuck to my guns. I said, you know what? Even though it looks like this might be the bottom, I'm going to stick to my original plan, and I'm going to wait for it to go even lower. So I just ignored all of this, right? Low prices, discounts, and then things started rising, and I'm like, oh man. Oh, did I miss the boat? Was that the bottom, right? Rising. And then it starts falling back down again. Exactly as predicted. Falling, and a surge, and then a fall. So, let's see how close I am in terms of my prediction of this being the bottom. And then I'm looking at a slow, sobering recovery, or slower. So this kind of surging back up stuff, I think people are going to be certain short-term gains of, through the momentum. That's only for the now. I think that's the edge of the storm. I like to describe this. I'm not describing this as a hurricane. I'm going to use a hurricane analogy because I think it really works with what I'm predicting. So on the edge, it's really, really volatile. So we're on the edge, right? We're getting into this crash. Things are crazy. Market's swinging up, it's swinging down, swinging up, it's swinging down. And a lot of that volatility comes from all we're learning more with these headlines, and then momentum traders trying to take advantage of these swings, and the algorithm trading pushing it up, pushing it down. Once we get to all the bad news out, and this is one of the failures of the administration, trying to play these little games and not really they're afraid of affecting the market. By doing that, they're just dragging it on. It's kind of like you got a band-aid and you're just inching. You got to rip it off. Rip it off. Be completely honest with the American people. Let them know, because what's happening right now is not really a surprise to me. It's a surprise to a lot of people, because they'll listen to the administration, who's softballing. Oh, we're fine, and we got 15, and it's gonna go down to 0 pretty soon, and we're doing excellent. Everyone's doing an excellent job, and it's excellent, outstanding, and we went early. Like all this positive stuff, which is not really based on facts and evidence. For people who can't read between the lines, they've been sort of misled. So it's dragging on the pain, because it's kind of, you get this hope from what he's saying. And then some other headline comes, and like, oh man, it's getting worse, but it can't get any worse than this. Still positive talk. And you get another headline, it's like, oh no, and all this is like bleeding, and that, is resulting in the market just, it's extending this, right? Think about if from the get-go we were completely, honest with how bad things could get. You can put hope in there. You can put some kind of, yes, things can get this bad potentially, but we are all hands on deck, and this is what we're going to do. We have this approach, and we will get through this, right? There's ways to build confidence and yet let people know what's really going on. I think Governor Cuomo is a good example of how to do that. He will straight up tell you how bad things can get. And like, look, man, I'm gonna tell you guys what's up, right? And the same token, he also gives us hope. Like that's real leadership. Now, I'm not promoting Cuomo. I'm not a fan of him. I don't really know much about him. All I'm pointing out is his leadership. That would have been better, because then it's kind of like everyone gets to see like how bad things can get, and then the market can adjust accordingly. But when you're kind of piecemeal, then it's kind of like we don't really know where we're at. And then it's a lack of trust. We don't know how we can trust the administration, whether what they're saying is true or not. And all this uncertainty leads to fear, and it also extends the period of time. If from the get-go we know how bad things were, we could adjust, and then now the market could actually have already hit the bottom. Now it's not gonna recover right away, but at least we could just take our blows, most of them right away, adjust to where we need to be, and then we just kind of teeter along, as opposed to it's kind of like it drops, and then we hear something else, and like, oh no, and it drops again, and then we hear something else, and like, oh no, and then like all this surprises. It shouldn't be surprises. We should have already been prepared for this, so we could have adjusted. So anyway, that is the edge of the storm. The eye of the storm is what I think comes next. When we hit the bottom, that's when I think a lot of sophisticated traders will realize, okay, so the time for playing and games is over. When I say games, you're just taking advantage of the volatility right now, because a lot of money can be made in that. Once that window of opportunity has ended, and what's going to make that happen is we're going to need to get the full picture of how bad things really are. We need to see the full blunt of the unemployment numbers, the full blunt of the death count, and how many cities are shut down. And I'm still thinking some big company, or some well-known company at least, goes bankrupt or shuts down. We need to see the carnage, so that we can, the full blunt of the carnage, rather. We're already seeing carnage, the full blunt of it, so that we can fully get to the bottom. Because once we've got the full carnage, we've seen everything. We've seen how bad things are. There's not going to be much room to go down anymore, because we've already priced in how bad things are. The reason why we're still going down is because the pricing is based on what we know at the time, right? And as the news gets more dire, the market goes lower. So once we get to the full blunt, that's when a lot of this momentum, dries up, and the volatility dries up, and that's what I would consider, I'm going to call it the eye of the storm. If you guys been through a hurricane, the eye of the storm is in the middle, where it looks calm, you think everything's good to go, and you might want to go outside, but the storm's not over, because you got the outer edge, the other edge of the storm that's going to come in. Now for us, fortunately, the other edge of the storm is actually a good thing, because the other edge of the storm is market recovery. So we're going to go through a period, I'm guessing, of where the market's not really doing much, low volatility, a lot of people sitting on the sidelines are too afraid to put their money in the market, things aren't looking good, we're in the full blunt of the dire news and the economy's looking horrible. No one's really trying to invest in the stock market, right? So low volumes, low volatility. Right? And then we're going to start turning the corner where we start to get some news, some good news. That's legitimate good news, not the fantasy nonsense we've been hearing. We start hearing about quarantines being pulled from this city and from that city, and you have investors that have been waiting on the sidelines because they want to get in at the bottom and profit from the market recovery or correction. Right? So as they start seeing these indications, some of the more aggressive traders will start jumping back in. And then by them jumping back in, they're going to push the prices up. And then other people will see that and they'll jump in. And it's kind of a domino effect. So that's going to be the next sort of surge in the market. Now, is it going to surge into this major bull market and, for a long period of time? Eventually, but I don't see that in the immediate terms. I see a pretty sizable correction coming right after the bottom. And then I see slow gains. And, it's going to drop down a little bit. The normal stuff. Normal, let's say normal sort of market behavior we're going to see after that. And then to really get to the full recovery from the 2020 highs, I see that as a long journey. So in short, I'm going to see after the eye of the storm, I'm expecting a 50% recovery to the market, somewhere around there. And that's going to happen pretty aggressively, right? So if you don't move quickly enough, you're going to miss out on that one. But then after that, to get at the rest of the 50%, I'm looking at that being a long process. How long? I don't know. It depends on how long, a lot of factors. But again, my investments are 4-year investments. I'm looking at this as a 4-year investment. This is not a short-term investment at all, right? So, those are my thoughts. This was my prediction. And it looks like we're on track. There's our initial spike, and now we're falling back down. So let's see if this eventually drops us below the previous low and then takes us to the true bottom. And then let's see what happens next. So that's what I'm doing. Tell me what you guys are doing. What are your strategies? What are you planning on doing? Knowing that I can't know what's happening. No one knows what's going to happen, right? We can only sort of plan and predict and sort of strategize, and using historical data, using your own personal instincts, and put that with your investment goals, and come up with a plan. But ultimately, we cannot know the future. So with that being said, what are your plans? What are you guys going to do? Thank you for watching, and I forgot to say bonjour, arrivederci, ciao.
Options are just
like coupons. Thank you for watching. If you enjoyed the video, click on the like button, subscribe if you haven't subscribed already, and smash that bell so you can get notified about future videos right here on this channel. And again, comment below. Let me know what your strategies are. What are you doing about the stock market?